Okay, yeah. You gonna set my mic up? All right, hang on. Before we get started, I gotta make sure that this account is open.
Everything's moved over, right?
Yep. Okay, the money is sent.
Great.
Yep, good.
Here we go in 3, 2.
I'm putting $100,000 of my own money in the line, and this is something I have never done before. But this historic market volatility has compelled me to do it. Because buried beneath all of the uncertainty, a new way for you to potentially double your portfolio has just emerged. And while that probably sounds too good to be true, especially when markets have been bouncing up and down like a manic depressive, as you'll see, using this new approach, we are already up 85% this year, almost doubling our capital in less than 6 months. How did we do it? Well, that's what I'm going to answer for you today in full. And just know, this is unlike anything you have ever seen from us before. It involves a secret that was pioneered by an elusive hedge fund. It's a secret that I estimate has allowed that hedge fund to turn every $1,000 invested into more than $100,000 since inception, an approach they've quietly used for decades to grow the wealth of their clients through every conceivable market. Clients that range from the IMF and Singapore Sovereign Wealth Fund to central banks and billion-dollar pension funds. And best of all, although this strategy works in any market, it truly thrives and was built for periods like this of mass uncertainty. Case in point, this year, while the Dow is swinging thousands of points in a day, and the VIX is soaring and crashing, we've made 74% on the iShares Silver ETF, 629% on Apple, and more than 1,300% on Starbucks. And we've done this without taking on any excess risk, without crazy speculation, and without trying to predict what's next for the markets. And we're not the only ones either. One of our beta testers, who you'll hear from in just a minute, has used this method to outperform the S&P 500 by 68% over the last year. Now, for the first time ever, we're unveiling the full method for free. I'm going to walk you through it step by step with nothing held back so you can actually start using this method immediately. What we're buying and when, how it works, the rules to follow, everything that you need to get started is in this presentation. And it couldn't come at a more opportune time because I believe the chaos we've suffered over the last 6 months is just a taste of what's ahead. Whether you love him or hate him or are indifferent towards him, if there's one thing we can all agree on, is that the next 4 years under President Trump will continue to be extraordinarily volatile. We're only halfway through his first year. He's already shown that this is not business as usual. While most folks see this chaos and panic, we see it as a singular opportunity for you to build potentially life-changing, lifelong wealth, one which the next phase will begin on June the 2nd. Unfortunately, after nearly 30 years serving investors, I know most of you are going to bury your heads in the sand. You'll not only miss out on this incredibly rare wealth building window, but also risking serious damage to their portfolio by making the wrong moves at the worst possible time. So in an effort to stop you from committing financial suicide, I'm unveiling the most audacious move of my entire career. As you likely know, I'm the founder of Porter & Co., which is a boutique financial research firm based in Maryland. Over the past 26 years, my companies have helped millions of Americans manage, grow, and protect their wealth. We've guided our readers through every conceivable market, booms, busts, panics, and everything in between. But I believe the true value of our work is seen during periods of deep economic uncertainty and instability, which is exactly what's happening now. As far back as 1997, I was one of the very few analysts predicting that emerging markets were about to crash, a prediction I used to make 600% in just 3 weeks on Telebras, the Brazilian telecom company, and 500% in 4 weeks when I recommended shorting the Japanese bond market in 1998. I did it again during the 2008 financial crisis when I recommended shorting Fannie Mae and Freddie Mac. During the financial turmoil of 2016, my partners and I made our readers double-digit returns in distressed corporate debt. Then, during COVID-19, I called the bottom of the market almost to the exact day and recommended a basket of companies to load up on. Now, I believe we could once again be entering one of these rare periods of immense wealth-building potential, and our results this year prove it. Because despite what you hear from the mainstream media, this is not the time to batten down the hatches, at least not if you follow the method that I'm going to lay out for you today. It's a strategy that we have used to almost double our capital, returning a massive 85% in less than 6 months. To put that performance into context, during the same period of time, the NASDAQ was down by as much as 20%. And just so we're clear, that 85% return is not some BS back-tested number. As I record this, that is the real return inside one of our accounts. Of course, past performance is not a promise of future success, but as you'll see, we're not the only ones doing this. Listen to what the 76-year-old mom of my lead equity analyst said after beta testing this new method. It's completely changed my retirement. With just 3 trades on Philip Morris, I've tripled my annual investment income and earned over $30,000 in capital gains. You're going to hear more from her later. But here's my problem. At the same time we are seeing these incredible results, I'm also being swamped with messages from panicked readers. As email after email pours in, I am truly concerned that many of you are, once again, going to miss the opportunity of a lifetime. And that's why I'm doing something I have never, ever done before, something a lot of my colleagues have advised me strongly against. I'm calling it Porter's $1 Million Pledge. And it is without a doubt the boldest, most outrageous move I've ever made in my career. As you saw a moment ago, I just wired $100,000 of my own money into a new brokerage account. And my pledge to you is simple. I am going to attempt to turn that $100,000 into $1 million using the same strategy that I'll unveil today. And here's the best part. We're not going to do this behind the scenes. I'm going to do this in public, in real time, with real money on the line. And you'll get to see everything. Every investment, every decision, every win, every loss. Everything we're doing to profit from this unprecedented market instability. And it will all be laid out step by step so you can follow along with your own money if you choose to do so. Why? Why am I doing this now? Because I believe what's unfolding in the markets today is a historic opportunity of both risk and reward. This is a situation with the potential to either make you wildly wealthy or it could wipe out years of growth in the blink of an eye. But as I said, I'm really worried that most of you are going to end up on the wrong side of this risk to reward equation. So I'm putting myself on the line with both my money and my reputation at risk as a way to prove to you just how important this moment is and to show you how easy it can be to build unbelievable wealth during market conditions like we have today. So if you're serious about growing your wealth, then I invite you to join me for the ride starting on June the 2nd. Before we get started though, I want to make one thing really crystal clear to you. My $1 million pledge is not going to happen overnight, this year, or even next. If you think returns like that are possible, well, then I've got a bridge in Brooklyn to sell you. No, the $1 million pledge, making 10 times my money, will take time. It could take a few years. It could even take 5 years. And of course, I might fail. This might not work. I don't know for sure what will happen, and I'm not going to give promises to anyone. The only thing I can promise you is that I will be there right with you in the trenches for all the highs and for the lows when they happen. That said, if you know me, I'm not someone who likes to lose. And between you and me, the only reason I'm willing to launch such an audacious venture is because of the financial dislocations that Trump's presidency has triggered and will trigger. You see, it's during periods of great volatility and distress that I believe this method can deliver unbelievable results. I saw it in the 2000s when the VIX, that's Wall Street's volatility index, surged to 50 during the dot-com blowup. We saw it during the great financial crisis when the VIX skyrocketed to as high as 80 and stayed elevated for months, giving you the chance to earn as much as 126% in Tiffany's, as well as 83% on CHK, 177% on LO, 120% on BMY, and 63% on my favorite trade, McDonald's. We saw it again in 2020 when the pandemic set VIX soaring to all-time highs of 82, and we're seeing it again today as President Trump wages his misguided war on trade in an attempt to reorder the global financial system itself. It's this volatility that we are going to leverage to generate unbelievable returns, the type of returns that are not possible during normal markets. Take our recent trade on Novo Nordisk as an example. When the VIX spiked to 60 on April the 7th, we made 34% in just 25 days. That's the equivalent of a 229% return over the course of a year. And we achieved this without taking on any excess risk or worrying about what the market was going to do next. We did the same with the iShares Silver ETF for a 74% return, Apple for a 629% return, Starbucks for a 10-bagger. In fact, as you'll see in just a moment, I would argue that our risk on these trades was pretty much zero, as our worst outcome was still going to be a win. And while I can't guarantee it, I believe we're entering a prolonged period where trades like these could be a dime a dozen. You see, the financial world we are in today is very different to what we have experienced for the last decade. Ever since the 2008 crisis, central banks have used unprecedented monetary power to dampen volatility and control risk. As you know, every new crisis we saw was met with what? More and more money printing and more government debt issuance. As a result, interest rates were manipulated to zero. Fear was sucked out of the market under the illusion that the Federal Reserve would always come to our rescue. And as a result, trillions of dollars flooded into the markets, driving equity valuations to insane and unsustainable levels. But the party is now over, and the reckoning is here today. If you've been following my research recently, then you know I've been predicting a recession for months now. I've been urging my readers to raise cash, warning that markets were entering treacherous waters. Last year, I recommended selling stocks like Nvidia, Taiwan Semiconductor, ASML, and Veritiv before they collapsed by as much as 50%. Now, exactly as I predicted, optimism has drained out of the markets as the economic realities we are facing hit home. Negative GDP growth, bankruptcies rising, consumer credit defaults spiking, foreclosure rising by double digits, jobless claims surging to their highest levels in years. The list of warning signs go on. And finally, both Wall Street and Main Street are waking up to the fact that an economic reckoning is imminent. Even if we somehow dodge a recession, which I think is impossible, there's no doubt that we are entering a new and far riskier world. Over the last few months, we've been plagued by greater volatility than I have ever seen outside of the global financial crisis of 2008 and 2009. And although it's the complete opposite of everything you're hearing from the mainstream media, this new economic reality has blown the doors open to a wealth-building opportunity the likes of which I haven't seen in decades. One that I am now grabbing by the throat with both my hands, because I know it is moments like this that can catapult you into an entirely new stratosphere of wealth. Already this year, as markets collapsed off, I used the chaos to pocket an extra $105,000 from one trade in Hershey's. How? Well, as you've likely guessed, this is with options. Yes, I said the dreaded O word, options. And I understand that the idea of buying or selling options may make you want to run for the hills. But as you'll see, my method of trading options is unlike anything else you've ever heard or seen before. In fact, I think it's one of my biggest breakthroughs in finance. If you followed my career, you'll know I rarely, if ever, recommend trading options, and that's for a simple reason. Most people lose money trading options. They get lured into the market by the false promises of instant income, quick riches, and a bastardized version of what options should actually be used for. And if you've been in the financial research world for any length of time, then I'm sure you've heard options being sold to you this way before. Why? Well, here's the dirty secret. Because it's sexy and easy to sell. And I have no doubt that I could make a small fortune by doing the same, which begs the question, why haven't I? Why haven't I ever promoted options? Because there's one glaring problem that nobody tells you about, and that's the fact that you're picking up nickels in front of a steamroller. Let me explain. While it's true, buying and selling options is a way to generate income, like you saw with my Hershey's trade. It only works until it doesn't. And then it really doesn't work. Just look at the CBOE S&P 500 Put Selling Index, an instrument tracking the performance of a consistent put selling strategy on the S&P 500. Throughout the low-risk environment of the last few years, the index went in one direction until it didn't. As Trump's trade war began, the index gave back a year's worth of gains in just 6 weeks. It's the same story with the YieldMax S&P Covered Calls ETF. It lost nearly 20% in just 6 weeks from late February through early April. In other words, you can spend years trading in and out of these positions under the illusion that you're winning, only to be blindsided when the market or a stock moves violently against you, destroying years of gains in the blink of an eye. As one longtime reader, Matt V, wrote to me recently, quote, "It's been a while since I sold puts. I've had mixed results in the past. Did very well for a while, then gave it all back when I got a little too cavalier. I was following some guys with a model selling puts on extremely volatile stonks like Riot, MicroStrategy, Bitcoin, and tech hype stocks. I guess that works out okay until the stonks plummet. Whoops." Matt's story is all too common. In fact, virtually everyone I know who trades options tells that exact same story. I did really well for a while, and then everything blew up. And that's why at Porter & Company, I have refused to recommend options to my subscribers because the risks are just too large. And I know eventually the allure of making what seems like quick and easy money will cause most subscribers to blow their accounts up. They will either fundamentally misunderstand what options should be used for, or they will apply the techniques incorrectly. Or, after a few successful, usually conservative trades, they inevitably will start chasing even bigger and riskier returns, like Matt did. So, if I've never done this before, what's changed now? Why am I putting up $100,000 of my personal money, not to mention my reputation, on the line by hosting this event today? There are 2 reasons I've made this decision. First, this market environment. All of the volatility and uncertainty has finally tipped the odds in our favor and options in a way I haven't seen in years. And second, because my team and I have developed a powerful new strategy, one that I know will completely change how you build wealth. I have to warn you though, what I am about to reveal will fly in the face of every single instinct you've probably ever developed as an investor. And I doubt more than 1 in 100 people watching this will actually have the mental fortitude to use the method correctly. It's not because it's overly risky. It's not. It can actually reduce risk while also increasing upside potential. And it's not because it's complicated or time-consuming or requires any special knowledge. It doesn't. In fact, this is an approach that you set and pretty much forget once every 90 days. So 4 times a year. And your failure will not come because you need a massive amount of capital either. You don't. Most of these trades can be made with a few $1,000s. And it's not for any of the other hundreds of reasons that I could list why people might fail. No, it's simply because this technique will require you to overcome one really difficult psychological challenge. What am I talking about? I'm talking about purposefully holding losing trades. I know that sounds really counterintuitive, and it is. But if you can wrap your head around this one idea, I would argue you could open up an entirely new vista of opportunity. This is an opportunity to potentially multiply your money far faster and with far less risk than you ever imagined was possible. And it's how, while trillions of dollars in equity value was being destroyed in recent months, we were quietly growing our account by 85%. On an annualized basis, that's a 478% return. And we did it not by finding a hot stock, and not by making a lucky speculation, and not by aggressively trading options on risky stocks, but by using what I call the holy grail of investing. And just so we're clear, that is not some marketing term I've coined. The holy grail is what Ray Dalio, one of the most successful money managers in history, named this concept. And it's the foundational pillar he built his legendary hedge fund, Bridgewater Associates, upon. You see, what Dalio discovered was deceptively simple and yet absolutely transformative. You don't need to predict the future. You don't need to find the perfect company. You simply need to harness the power of negative correlation. What in the world is negative correlation in plain English? Negative correlation means your positions do not move in the same direction. Instead, you purposefully construct a portfolio of uncorrelated investments, and when you do, remarkable results can occur. Portfolio volatility plunges, risk plummets, and returns per unit of risk explode through the roof. This idea is exactly how Ray Dalio transformed Bridgewater from a 2-bedroom apartment in New York City into a firm managing the largest pools of capital on earth. And our new breakthrough is that we've been able to take Ray Dalio's holy grail of investing and apply it to the options market. By using negative correlation, we've engineered a new method that produces real income, offers asymmetric upside, and provides built-in crisis hedges, all in one. In my nearly 30-year career as an investor, this is the most powerful approach I have ever yet discovered. It's so powerful, in fact, that I'm building my own $1 million pledge using this exact strategy. And while I'm going to lay out the full strategy for you in just a moment, I know that most people will still refuse to use it because, by its very definition, to harness the power of uncorrelated returns, you need to be making small, strategic, losing trades. That is the cost of entry. And while I believe it's the equivalent of throwing away a penny to pick up a $10 bill, the psychological price will be too high for most people to pay. But the upside, for those who can stay the course, the potential to earn steady, relatively low-risk returns of 20% or more during low volatility markets, but hang on, and the opportunity to make massive profits during periods of high volatility when everyone else is losing their shirt. And that's exactly what we've been doing this year, almost doubling our capital in less than 6 months without taking on any excess risk. And I'm going to give you our playbook right now. As you likely know, at the start of 2025, Porter & Company was bracing for chaos. While others were euphorically loading up on stocks at record highs, we saw that dark clouds were forming. This dichotomy between really enthusiastic investors and deteriorating fundamentals provided us a tremendous opportunity to acquire what we call crisis hedges for pennies on the dollar. By using put options, we were able to create a type of insurance that would pay us if and when stock prices fell. We began accumulating put options in companies we viewed as overvalued and at risk of reversal if market sentiment soured. This included major businesses like Apple and Starbucks, companies that most investors viewed as low risk, which meant we could buy our insurance at dirt cheap prices. We bought puts in Starbucks on March 3rd when the stock was trading at a 52-week high. Then, as shares began dropping, we covered the trade by selling out of the money puts. This type of trade is known as a put spread, but don't let the jargon blind you to what the result was. For assuming just $280 of risk, we've, as of the time of this recording, earned an open return of 1,338%. We did the same with Apple. Buying just over $1,000 in insurance on Apple's stock, we're now up more than 600%. However, the point of these trades isn't primarily to make money. Instead, it's to provide crisis insurance for our portfolio. In fact, we'd be perfectly happy if these trades end up turning against us. Why? Because for a few $1,000s, about 5% of our account, we insured ourselves against the risk of a market meltdown. Whether the market rallies, collapses, or stays flat from here, we will win. And that is the beauty of uncorrelated returns. Because these hedges have insured us against a crisis, we can deploy the rest of our capital a little more aggressively, which is exactly what we've been doing to capitalize on the historic volatility of the past few months. In April, as the risk index, the VIX, surged as high as 60, we started selling puts on world-class companies that we want to own forever. And this is where the real magic happens. Take Novo Nordisk, the trade I mentioned earlier. We sold puts at a price of $61. This simply means that we're committing to buy up to 100 shares of that stock at $61 on May the 2nd. This was, in our opinion, as close to a risk-free investment as possible because there were only two possible outcomes from here. Outcome number one, if the share price stayed above $61, it meant that our options would expire worthless, and we would walk away with about $384 that we got for selling the put. Or outcome number two, if the price of Novo had closed below $61, then we would have had to purchase 100 shares of Novo for $61. That's a $6,100 investment. This is still a chance to win because we got to buy one of the world's best companies at less than 15 times this year's earnings. And that's the cheapest it's been in the last decade. Plus, the income we generated when we sold the put meant that our effective entry price was actually $57, not $61. In other words, in our view, we can't lose. So what ended up happening? Well, our option expired worthless and we weren't put the stock. So we walked away with a 34% return on the margin in 25 days. Annualized, that's a return of 229%. And this is just one example. As volatility spiked, we've been on a put selling spree, earning over $10,000 in income in just a few months. And remember, that's just in one of our accounts. And one of my larger accounts, I've earned over $100,000 in premium. Now, some of these contracts will expire worthless, like Novo Nordisk. Others will result in us buying great businesses at dirt cheap prices. Either way, I believe we're winning. But the secret here is the fact that we could do this without the risk of being wiped out by a major market event. Remember, as I explained earlier, the problem with only buying or only selling options is that you're always exposed to the market turning against you. But because we have negatively correlated positions at the same time, we've insured ourselves against any unexpected market turns. That is what allows us to rake in thousands of dollars and very low risk profits at the same time that most folks were hemorrhaging money. It's how over the last several months, we've been able to grow our portfolio by 85% during one of the most volatile markets ever. And it's how, moving forward, we're going to attempt to continue compounding our capital by double digits a year. It's also how we're protecting ourselves from and aiming to profit with the growing risks of a major market crash. Because the beauty of this method is that there are lots of ways to win and very few ways to lose. In fact, the real risk is just yourself. Because as sure as the sun rises in the morning, the overwhelming majority of people who learn about options will find a way to screw it up. I've seen it time and time again. After making a few successful trades, when they pocket what seems like free money, people start to feel smart and they start what I call premium shopping, which means rather than selecting safe securities to trade against, they look for the securities that are offering the highest possible payout to people who will sell puts. They inevitably seek ever larger income payouts on riskier and riskier stocks, and you can guess what will happen next. They end up selling too many contracts on a company that falls 50% out of the blue, and they suffer a huge catastrophic loss. Or they lose all discipline on their position sizing, or they forget to set up the crisis hedge, or they lack any kind of risk management skills, and they try to get rich quick. And when the money outruns wisdom, ruin isn't far behind. That is why, if you want to potentially make a lot of money trading options, you must, and I repeat, you absolutely must follow a very few simple iron rules. First and foremost, never, ever sell a put on a stock that you do not want to own at a strike price that you're not thrilled to pay. You must always stick to world-class businesses that you are aiming to build a long-term portfolio around. Doing this means your worst-case scenario is that you buy a company that you already wanted to own at a price that you're willing to pay. I only ever sell puts on companies that I want to own forever. Companies like Uber, Philip Morris, Hershey's, and the others that you see on your screen right now. Resist the temptation to chase the fat premiums you will see offered on highly volatile stocks like Tesla or MicroStrategy or Bitcoin. Yes, the upfront income is far, far greater, and it is understandable why so many people are tempted, but don't do it. The risk of ruin is too high. The second rule is to ensure that the income you receive and the strike price that you select offer a huge margin of safety. Take my trade in Tiffany's as an incredible example. Back in 2009, in the aftermath of the global financial crisis, Tiffany's, the jewelry retailer, was trading for only $21 a share. It's difficult to explain how cheap that was for one of the world's premier brands. But in the midst of the worst financial crisis since the Great Depression, the stock had been absolutely obliterated. A world-class company that earns 50% plus gross margins, that holds vast inventories of jewels and real estate, and has billions in brand value, was trading for $21 per share. It was one of the best opportunities that I had ever seen in my career. You see, in my view, it was almost impossible for Tiffany's stock to trade any lower. Why? Because there was so much fear in the market, we were able to earn $100 per contract selling puts on the stock. I saw this trade as 100% safe, even going so far as to say that I would put up to 10% of my entire liquid net worth into this trade. In my view, it was simply free money because there was no way that Tiffany's was going to fall as low as $15. That was our strike price. And even if it did, the worst case scenario was buying a world-class brand for a fraction of its value. And what if that had happened? Well, you could have just held on to the stock until the company was bought out by LVMH for $131 a share. That would have been a return of 526%. And that is the type of can't-lose proposition that we are looking for in our options trading. There was no downside on this trade. It was only a question of whether I would make a whole lot of money quickly or over 2 years. Now, the third and final rule is that you want to find options with a very high implied volatility. You see, options prices are based on the volatility of the underlying stock. So, the more a stock moves around, the more expensive the options will become. But sometimes, the implied volatility is far higher than the actual volatility. And it's those types of opportunities that we're looking for in our trades. These 3 rules. Number 1, only trade stocks you want to own. Number 2, only place trades with a huge margin of safety. And number 3, only look for options with high implied volatility. These are not suggestions. These are iron rules of the road. You cannot break these rules. But if you follow those rules, in my view, it's almost impossible to lose money over the long term. Now listen, nothing is completely risk-free, and you should never risk more money in options than you can afford to lose. But if there's a better way to make money in equities, I haven't found it yet. This is by far the closest thing to a free lunch you're ever going to find on Wall Street. This is a strategy that can deliver double-digit returns where the only downside is buying a stock you already want to own at a price you're willing to pay. And I believe that if you can resist the temptation to do it yourself, it could change your financial future. Belief alone doesn't cut it though. And that's why when we started developing this new strategy, we wanted cold, hard proof, not just in our own accounts, but with our readers too. So we put it to the test, not with a professional trader, not in some back-tested algorithm, not with paper trades. No, we handed it to someone with no prior experience trading options, someone with a small account, someone who could not afford to take big risks. And we kept it in the family. If you have followed Porter & Company for any length of time, you probably know my right-hand man and our lead equity analyst is Ross Hendricks. Ross has been at the center of this project from day one and was integral in developing this new trading approach with me. When it came time to test the strategy in the real world, Ross didn't just put in his own money. He didn't just come to me. He went to his mother. That's how much conviction he had. That's right. He believed in it so deeply, he was willing to put his own mother's financial future on the line. So how did it go? Well, before joining us, Mrs. Hendricks was, like many retirees, extremely conservative with her money, telling us, quote, "I kept most of my portfolio in low-risk money market funds earning 4 to 5% interest. I didn't want to risk losing money in the market. But after my son showed me how to trade options and how they can increase returns without taking on a lot of risk, I gave it a try, and it has completely changed my retirement." You see, we showed Mrs. Hendricks how the strategic use of options could significantly increase both her income and her capital gains. Take her trades with Philip Morris. She replaced $50,000 from a money market fund with a tobacco giant. But she didn't just buy and hold the stock outright. Instead, we showed her how to use options to amplify her results. And over the past year, she has earned $4,600 in premiums, $2,600 in dividends, and $32,000 in capital appreciation. Together, the options trades and dividends alone have paid out 14.7% cash yield. That's about 3 times more than she was earning in her money market fund. And when you add in the capital gains from the stock appreciating, her total return is 79%. That is beating the S&P by a country mile. She also replaced $50,000 in money market funds with shares of Vici, a real estate investment trust that owns trophy properties all over the world. The result, $2,100 in premiums, $2,900 in dividends, and $4,400 in capital appreciation. Her total return on Vici was 19% versus 11% in the S&P 500. For someone who thought they were stuck earning a few percent per year, can you imagine how much of a game changer this is? But don't take my word for it. Here's what she had to say about it. From just one of my trades, I've tripled my annual investment income. I'm now earning more income than I could ever have hoped to make in money market funds. And this year alone, the income from my options trades allowed me to buy a new dishwasher and put in a new fence. I'm no longer worried about running out of money in retirement. In my opinion, however, the real power of this approach isn't the income or the capital gains that you can earn. It's the fact that you can earn these kinds of returns with almost no volatility and with virtually zero risk. Because let's be real, it's not hard to earn huge returns if you're willing to shoulder huge risks. But if you're someone who can't afford a big loss, someone who can't gamble on their future, someone who needs financial security above all in retirement, then this is the strategy you've been waiting for, because everything is built on a bedrock of the safest, most reliable forever stocks in the world. Case in point, during the recent crash, while the S&P 500 dropped 19%, Philip Morris went up, and Vici, it was only down 2%. So while millions of other investors were stricken with panic because the markets were crashing, Ross's mom, she never even flinched. She didn't lose any sleep. She didn't have to worry about her portfolio because it was going up. She was making money while everyone else was losing it. And while I'm not saying or guaranteeing that you will see the same results or any results at all, I sincerely believe if you just follow our methods, this will mark a turning point, not just for your investing, but sincerely for your whole life. You're going to learn how to make money in the markets with virtually no risk. But let me be absolutely clear. If you do not follow our rules, if you try to cut corners, if you chase risk, if you get clever, you will blow up your account. Not if, not when, 100% certainty. And if you do that, please don't come crying to us. We are telling you that's what will happen. Because after the number of warnings that I am giving you today, I'm not going to have any sympathy. Despite all this, I still know the siren song of getting rich quick will be too strong to resist for some of you. And that's why at Porter & Company, we have been very resistant to the idea of anything related to options, because I would much rather you make less money and make it slower than blowing up your account in some foolish attempt to get rich quick. However, given these extraordinary economic circumstances, and given the robustness of our new strategy, we have begun to cautiously test the waters to see if our readers wanted our help trading options, and the response was overwhelming. 97% of you voted yes in response to our survey, and we received a tsunami of emails requesting more information. So, while I might come to rue the day, we decided to host this special broadcast to walk you through our whole process. This event on its own, though, probably isn't enough. Because even though I've given you our strategy, the names of the companies to trade, and the rules to follow, I know that entering the options market alone is a nightmare for most investors. It's too confusing and it's overwhelming. As an investment publisher, that kills me because I know if you can master the options market, your financial life will change forever. I mean, I can still vividly remember November 20th, 2008, when I wrote an email to my closest friends and family saying that I was going all in. I told them I believed the market had reached the point of maximum pessimism and that I was pushing almost all of my chips into the pot. I had never written anything like this to my loved ones, and I've never written anything like it since. A year later, the Dow Jones was up 40%, one of its biggest one-year moves ever, and the profits I made that year were massive, gains that propelled me to a new level of wealth. But for most folks, investing at the depths of the financial crisis was too scary. So they missed out on what could have been, and what was for me, a truly transformative moment. This is something I've seen over and over again throughout my career. The opportunity is there for the taking, but subscribers were not willing to grab it. Once again, I believe we are entering one of those rare periods of incredible opportunity, and I really do not want you to miss out on it. That's why I've decided to launch the most audacious undertaking of my career, what we're calling Porter's $1 Million Pledge. I've put $100,000 into a new brokerage account, and using the same strategy I shared today, I'm going to attempt to turn it into $1 million. And because I don't want anything to hold you back, I'm doing something I've never done before, managing this money in a live account in front of you, because I can't think of a better way to highlight how serious I am about this opportunity or to emphasize how urgent this moment truly is than by taking my own money and putting it on the line. Like I said, over the years, I've seen too many of my readers wait too long, freeze up when they should have acted, let fear hold them back, and then watch and regret as yet another opportunity closes. I don't want that to happen again. So starting on June the 2nd, we're going to share every trade we make so that you can follow along with your own money if you choose. Ross and I will document everything. You'll get a full walkthrough of the trade, why we're making it, the risks and the rewards, how to position size, and everything else that you need. And if you want, you can follow along with your own money, copying the exact same trades we're making with one small difference. While Ross and I will walk you through the trade, showing you how to set it up step by step, we will not execute that trade for at least 24 hours. This means you will always have the opportunity to get into the trade before we do. This is unlike any initiative I've ever undertaken before. It's me, Porter Stansberry, putting myself and my money in the trenches with you. And I believe it's going to be one of the most important legacies of my whole career. This is a project with the potential to create more wealth than anything I've ever done before, not as an analyst or a newsletter writer, but as your partner, making the same trades and sharing the same wins and the same losses. Of course, you don't have to follow our trades, but if you want to, it'll all be laid out for you. And while I can't promise our future returns will be as amazing as they've been so far, and I can't make you any promise about future performance at all, I can promise you that I'll be right there with you, sharing the highs and the lows. Over the long run, I'm going to take this $100,000 account and work tirelessly to grow it month after month, year after year. And whatever amount of money you choose to set aside, if you join me on this journey, we will be in it together, in full view, with nothing held back. And just so we're clear, how we're operating this account is likely different from anything you've seen before, not only in terms of the strategy we're executing, but in how we're managing the live account and the recommendations we make. You see, this isn't some day trading service that will require you to sit in front of your computer all day. We're not trading in and out of positions using some bullshit algorithm or charting system. We're not speculating on risky penny stocks or chasing cryptocurrencies. If you know my work, you know that's the antithesis of how I invest. Absolutely not. We're not doing that stuff. Instead, we're executing a handful of fixed trades every 90 days. Trades that if you so choose, you can place and then pretty much walk away from. These trades will mostly close within 90 days, so your capital isn't tied up, and so you can roll your money into new trades every quarter. Of course, we will be there with you throughout the entire 90-day period, giving you regular updates and all of our insight. We'll obviously be opportunistic too, so if we spot a too good to miss out on trade outside of the 90-day tranches, we won't let it pass us by. For the most part, though, you'll only be making new trades every 90 days, which means you only need a relatively small, fixed amount of capital for this strategy, and you don't need to waste your time staring at the screen day after day, attempting to time the market. You won't have to stress about daily fluctuations in prices. If that sounds good to you, then mark your calendar for June the 2nd, because that is when our first tranche of trades will go live. And I want to invite you to join me, because today we are officially opening our new Porter & Company Trading Club. And I really couldn't be more excited about this, because this is not your usual financial research product. This is my mission. At the heart of it is my $1 million pledge. This is the most audacious move I've ever made in my 26-year career. And we're embarking on this incredible journey together, trade by trade, with full transparency and real skin in the game. As a member of the trading club, every 90 days, you're going to receive a new tranche of carefully vetted trades. Access to each 90-day group of trades costs us $1,250. So access to a year's worth of trades will cost you $5,000 normally. But to mark this historic launch and to usher in a small group of true founding members, we're going to do something very special. For the next few days only, we're giving you the entire year's worth of trades. 4 tranches of high profit potential trades for a fraction of the total cost. As a member of the trading club, you'll get to follow along with my mission to turn the $100,000 I've set aside for trading into $1 million. It goes without saying that this will take some time. It could take years. But by being opportunistic, by placing strategic trades and investments, my goal is to compound this money year by year until we achieve our mission, and most importantly, to document every single trade along the way. So if you choose, you can follow along with your own trading, executing the exact same trades that we are making. Of course, you do not have to make the same trades. You don't have to make any trades at all. But we'll document all of this for you so you can learn how to trade, and if you want, you can follow our trades for real money. You'll get step-by-step videos walking you through every trade we're making and why. You'll get our position sizing calculator so you can adjust the trades we're making to your portfolio size and risk profile. You'll get access to the Trading Club platform where you can access all of our resources, all of the research, and track our portfolio. You'll get ongoing updates, of course, and reports on all of our positions, ensuring you know exactly how our trades are performing. You'll get timely details on when we intend to exit or enter new trades. And best of all, you're also going to get the Trading Club Playbook. This is a living, breathing document that explains our strategies in exhaustive, exacting detail. And yes, I said strategies, because while the focus today is on options, the Trading Club will not be limited exclusively to selling puts and buying calls. No, our club is way bigger than that. We're focused on fulfilling my $1 million pledge come hell or high water, and we're not going to pigeonhole ourselves into only one strategy. That's not how good investing works. Instead, we're always going to be opportunistic. We will be hunting for ideas across the financial markets, merger arbitrage situations, distressed credit opportunities, event-driven trades, special situations. I'm not going to pretend to know what the next set of trades will be or where we will conduct them. All I can tell you is that every 90 days, we're going to issue a new tranche of trades. Trades we are making with our own money. Trades you can copy in your account if you want. Trades designed to maximize our profit potential. This is key, without taking on any excess risk. We are not chasing moonshots. The vast majority of the time, especially in this volatile, opportunity-rich market, we will be making options trades on forever stocks. But we won't limit ourselves, and whenever we add a new arrow to our quiver, the Trading Club playbook will be updated and expanded with the new strategy. This is almost like you're getting a new premium advisory that other publishers would charge you thousands of dollars for, but as a founding member of the Trading Club, you won't have to pay a penny more. If that sounds like it could get overwhelming, don't worry, because even as the playbook expands, we'll make sure these trades remain accessible, both in complexity and in the capital required. Like I said, every trade is designed to open and close within a 90-day window. So you're never going to tie up your capital for long stretches. You won't have to bite off more than you can chew, and you won't have to add capital for new trades. But listen, all that is down the road, because you need to learn to walk before you can run. So to mark the official launch of the Porter & Company Trading Club, we're going to keep it really simple. Starting on June the 2nd, we're going to make a handful of options trades on some of our favorite forever stocks. This is the same method that's helped us grow one of our accounts by 85% this year, nearly doubling our capital in just 6 months. It's the same strategy my lead analyst Ross taught his mom, helping her significantly boost her annual income despite her never having traded options. It's the same strategy I've been personally using to generate hundreds of thousands of dollars in what I see as risk-free money in Hershey's. Most importantly, it's the same strategy we believe is ideal for capitalizing on the extreme volatility and the uncertainty in our markets today. And I want to invite you to join us. As I mentioned, access to each 90-day tranche of trades costs $1,250. So access to a full year's worth of trades would cost you $5,000. But if you join before midnight Friday, May 30th, you can get the entire year's membership to the Porter Company Trading Club for just $2,000. That's a massive 60% discount, $3,000 in savings. And when you become a founding member, that discount is locked in. So if you choose to remain a member, you'll never have to pay the full retail price of $5,000 a year. If you're ready to join me inside, click the button below this video. My team has listed all the details for you there. Everything is laid out in clear, simple terms. All your founding member benefits, your discount, the frequently asked questions, and a full breakdown of my $1 million pledge. It's all waiting for you. So go ahead, click the button below now while this invitation is still on the table. After June 2nd, this offer will expire, and access to the Trading Club will be closed for at least 90 days. And of course, it could be closed far longer. We'll only open access to the Trading Club if we're certain the number of new members won't impact the trades that we're making. So click the button below now to secure your spot as a founding member of the Porter & Company Trading Club and join us inside. Or if you prefer, you can call a dedicated line we have set up just for the people attending today's event. My team is waiting to answer any questions you may have. And of course, if you want to join, they will help you get started. So just click the button below for all the details, and you'll get a full write-up of all the benefits for club members. I hope to see you inside.